Hello, fellow traders. 'Tis I, the Rumpled One. Today's topic: trade what you see. I've been saying that for years. You have to trade what you see. You can't worry about what other people see or what they do or how they trade. You have to trade what you see. You need to train your eyes to see what's there and not see things that aren't there. So many people load their charts with indicators to tell them if price is going up or down, when if you just trust your eyes and trade what you see, it's not that difficult. We can start out with a blank chart, naked chart. And so the question is price going up or is price going down? Well, if you trade what you see here at the start of the hour, then perhaps you might want to trade up. Now, or you might want to trade down. You see here, price is moving down. We expand that, and you can see you've got a lower high, a lower low, a lower high, a lower low. So you might be inclined to trade short. That's because that's what you see. It's just naked. Now, some people don't feel comfortable with this. You can see price made a recent high, then it didn't quite get there, and it's been going down ever since. But you can also see price has had a nice move up too. So it looks like, if anything, it's doing it's retracing. It's giving back, taking back. But a lot of people don't like to trade naked. You can put on some horizontal lines, and you can see here it couldn't stay above 136.40, and it's fallen down twice. Now, sometimes they say if you think of these as ladders, you can see price went up the ladder and then price went down the ladder. So the question is, do you think price can stay in this area? Do you think it's going to wind up here? And you trade accordingly. You trade on what you see. So you can see here we've had 1, 2 lower highs, 2 consecutive lower lows. You might want to trade down. On the other hand, you'd say, well, price has been going up, so maybe I should wait for it to come back on a pullback and then get in to go with this upward movement here. You see it went up, pulled back, went up, pulled back, went up, and now it's pulling back again. So the question is, do you want to trade as a green rat going long, or do you want to be a red rat, go short? Those of you that have been following me for years understand about the rats. For those who haven't, that's a reference to a study that was done where they put rats in a T-shaped maze, and the rats found the cheese about 62% of the time or 60% of the time. And the Yale students when they gave it to the Yale students, they tried to figure out some type of algorithm, and they only found the cheese 52% of the time. So the rats beat the Yale students because the rats just kept turning left. Because the way it was is that it was a slightly rigged system, so the cheese would usually be to the left more times than to the right, and the rats caught on. They just always turned left. But the Yale students tried to figure it out, and they just couldn't couldn't beat the rats. And that's what happens with trading, is that these people come up with all these fancy algorithms and systems and higher math and rules. In fact, one guy over on Forex Factory I posted about, I think he's just added more rules. He took a very simple system, trading at the 0-0 lines, and he's now turned it into something that's got close to 20 rules. I mean, you see here, 136000. This is green, price is going up, you go long at the line. I don't have to worry about what's going on at the 90 or the 10 or anything else. No, just this one simple trade right here pays off time and time and time again. It's just that simple. What you see right here at this line, which way was price going? It's going up. And so once again right here you can see the 136.20. Which way is price going? Well, you can see it's going up. The question is, do you want to take that trade? It's up to you. Now, some people say, well, you know, I need something a little bit better. So then what you can do, maybe you want to look at today's high, the previous day's high, today's low, the previous day's low, the previous day's open, today's open. And you can see, once again, you can take these trades in the direction of the line cross. So starting from today, you see here it dropped below the open, went up a little bit, pulled back. Difference between 94 and 83, depending on your risk, is where you'd have put your stop loss. If you didn't trade during that Asian session, you came in a little bit later, right there, across the open, there was money to be made. And you see here it pulled back to the current day's midpoint and bounced off. One of my favorite trades. Same thing here, current midpoint, bounced off. So sticking with the color of the day, which was green above the line, you'd be looking for trades to go long, unless you were a red rat, and then you'd trade off the high. But in all these charts, you trade what you see, not what you think, what you see. So another trader likes to use dynamic support resistance based on the last 4 hours of trading. So you see here we can expand it. The yellow means horizontal, the blue means it pushed up. And let's see, this is magenta. You can see it dropped down based on the last 4 hours using H1 bars here. So you can see here it pushed down, came up. So the question is, do you want to trade long? Do you want to trade short? Do you want to trade at the line? Do you want to take reversals off? You trade what you see, not what somebody else sees, not what somebody else is telling you to do. Trade what you see, because if you can't see it, how can you trade it? Trust your eyes. You don't really need indicators. Now, of course, it's nice to know these different levels. I wouldn't argue that. But when I say you don't need indicators, I'm talking about those squiggly line indicators that usually do nothing but hide price bars or candles, make it difficult for you to see what price is doing. So I hope this helps, because fellow traders, it's not what you trade, it's how you trade it. The Rumpled One, signing off.